Hello, everyone. Welcome to Personal Finance Series. You might be wondering, is it another YouTube channel with personal finance? Yes, it is. But my intention here is to keep the video short and to the point, and also give some action items for you to take back and work on. And also, I'm hoping these videos provide information to friends and family and anybody who's new to this country and are not much aware of the personal finance scenario. I'm hoping these videos will help. And I'm also hoping I can learn from you. So if you have feedback or questions, drop an email that's listed in the description. With that, the first topic here is to take a look at your overall personal health, or personal finance health rather, and look at how much your income is, where your money is going. So this slide here just gives you a higher level overview. As when the income comes in, by default certain deductions happen even before money hits your bank, right? If you have a retirement account with your employer, like 401k or health savings account or HSA, and insurance premium, and also you could have an FSA or limited purpose FSA or flexible spending account. So these gets deducted from your paycheck automatically if you have those set up. And after that, the taxes are calculated. These are pre-tax buckets, right? So money is deducted, and then whatever is remaining is where the taxes are calculated on. And once the money hits your bank, you have your typical expenses. Some of the major ones are listed here. If you are renting, your rent typically is one of the highest. And if you have a home, then if you have a mortgage on that, that will also be another one. And auto, if you have auto loans, and then you have kids in college, that will be another one as well. And you could also have investments with post-tax dollars here, Roth IRA or a brokerage account, right? So these are some of the high-level income, expenses, taxes, and how you could save. But the key thing here is to take a look at your last year expenses. Most of you are probably preparing your taxes. It's a good opportunity for you. If you don't have a software that does it, I use Monarch Money. The link is in the description, which syncs all your accounts, credit card, bank statements, and it's easier for you to track expenses. There used to be Mint, which was free, and it got discontinued. It's no longer there. There might be other free versions, but I like Monarch. It's primarily in the cloud. I used to use Quicken. By last year, I switched to Monarch Money. It's much easier, and it's mobile first development. So you can take a look at that. Either way, if you don't have that, then the other way is to manually look at your expenses using spreadsheet. The intention here is to understand your current status of your finance, right? So in this example here, let's say you have 100,000 as your income, and taxes, to make it simple, let's say it is $15,000, right? So US federal taxes is called progressive taxes. If you have lower income, then taxes are low. If you go higher, then taxes are higher. But for our discussion, we want to calculate the effective tax rate. And also you want to look at what is your savings rate. If you had watched my book summary, Quit Like a Millionaire, the authors, they had savings rate above 50%, typically for most of their earning years, and then sometimes they hit 70% savings rate, right? The more higher is the savings rate, you quickly can achieve a financial independence. And then 70,000 as an example is the expenses. Once you know how much your income is, how much your taxes, how much your savings rate, and how much your expenses, the next step is to identify what you can do to reduce these taxes, right? Legally, what you can do to reduce your taxes. There are options for W2 employees to do that. We will look at that in upcoming videos. What you can do to reduce the expenses, right? If you own a home, what you can do. If you're renting, what you can do. If you have cars, what else can you do to reduce the expenses and to increase your savings rate, right? End of the day, the higher your savings rate, it's better. It doesn't matter if you're earning $1 million. If your savings rate is zero, then you're going to continue working, right? So your focus should be to increase your savings rate, reduce expenses, and also your tax liability. So in this example here, the effective tax rate is 15%. the savings rate is 15%. It's not bad, but higher is better, right? So you want to target at least 20. So next year, let's say you want to target 20, right? Which is 2025. Assuming last year it is 15%, you want to target at least 20% this year. And expenses, if you do not track your expenses, then you don't really know where the money is going. So that is very important, you to do your tracking of expenses. Budgeting is the other aspect. I am not big on budgeting. I've tried few times, it did not work for me, but I do track my expenses using the software for last 10 plus years. I used to use Quicken, as I mentioned earlier. Now I switched to Monarch Money. So every month, ideally, you want to look at your expenses and then categorize them and track them and see where you can potentially reduce your expenses. One easy aspect is looking at all your recurring subscriptions, right? We have Netflix, you have Apple Music, you have HBO, quite a few streaming services or some subscription that you signed up, you never thought of canceling it. So those are things you want to take a look and eventually look at how the overall expenses can be reduced. And we will have detailed video about each of these three topics: reduce taxes, how to reduce your expenses, specifically the home and auto and college related ones, and how to increase your savings tax rate. With that, it concludes the first video. Hopefully it has been helpful, and I will have short videos. The intention is to keep it short, to the point, and give some pointers for you to take actions on. Thank you.